Okay, ladies and gentlemen, it's almost over. Look on the bright side. But hopefully we can add a little bit of entertainment to, or I can add a little bit of entertainment to the last few minutes. Somebody tried stealing an element of my thunder there with the rock star quote, where I noticed on the Investorium website, tonight was billed as the real rock stars. Well, I think tonight's the first time, and possibly the last time in my life, where I'm going to stand on the stage in a nightclub under the banner of being a rock star.
No, it's the first of many.
You haven't heard me sing. You wouldn't like it. So, I must first make apologies for Steve Ward, our MD and CEO. He couldn't make it this evening, so you've got the more youthful, better-looking version in myself. So, thank you very much. And anybody who can manage to complete reading that till the end, before I switch it on to the next slide, that I will buy them a bottle of wine afterwards. So, without further ado, covering the standard disclaimer, I would like to move on to Arafura and what we're about, a little bit of our journey, the rare earths marketplace, and where we're going. Because where we've come from is known. Where we're going to is within our control, and our destiny is in our own hands. So, one thing that a transformation that Arafura has been going through over the last 12 months or so is moving on from that junior explorer, emerging through a transition phase, ultimately into a fundamental large manufacturing organisation. And that organisation is going to include the mine site up at Nolans Bore, 135 k's north of Alice Springs, which is slightly remote but certainly not isolated, and a fundamental large, world-scale chemical complex based in Whyalla. So I think earlier this evening there was a mention about added value in Australia. And although the chevrons down the side maybe aren't the clearest at this distance, and I do apologise for that, just to read one or two of them, the upper part is ore and concentrate processing. Moving through rare earth extraction and separation to produce rare earth oxides. So we are doing something different. We are adding more value in Australia. I'm not going to use one of those four-letter words this evening, such as iron, gold, lead, zinc, where there is maybe a reduced amount of added value in Australia. We are going to produce rare earth oxides, and we have the full intention of making Whyalla the Australian gateway for rare earths to the world. We plan to make 20,000 tonnes of these based on a substantial world-class resource that we have identified at Nolans and spent many years examining, processing, developing the technology to the stage we're at today, where we have actually produced rare earth oxides in small quantities in the laboratory, and we are at present going through a demonstration phase of that technology. So, as I said, we're on a substantial route of transformation. One or two other items I would just like to draw your attention to is in terms of our share price, market capitalisation. We have our largest single shareholding is with JP Morgan nominees, which encompasses a large quantity of large value and a reasonable number of German shareholders at in excess of 30%. And our second largest shareholder is ECE, a Chinese organisation which invested in Arafura during the global financial crisis and has subsequently continued to dilute its interest in the company. Not necessarily wholly based on their their strategy. They are actually subjected to certain limitations by FIRB. So, moving on to our project, and a couple of artists' impressions or models which show the mine site and the chemical complex. As I mentioned, the chemical complex is a world-scale complex. It will have a chlor-alkali plant, it will have a sulfuric acid plant. We will have multiple product streams. The 20,000 tonnes per annum of rare earths are the principal product streams, but associated with the mineralisation are obviously a number of other species of which we can valorise those items. And I'll touch on that in a moment when we come up to some of the financial details of the revenue streams that we have. So we believe are one of the three well-advanced projects around the world, and I think I heard that comment almost in those terms by the previous speaker. We have spent a large number of years, effort, energy, and now spending more grey hairs on developing this to the stage where we will actually advance to production. At present, we are in the stage of our bankable feasibility study, which is scheduled for completion at the end of next year, in order to ensure that we have all of the parts of the jigsaw in place for the financing and actual construction and ultimate manufacturing of our desire to turn that Nolans resource into value for all stakeholders. So, in terms of the Nolans resource and its global significance, 20,000 tonnes per annum is a globally significant quantity. When looking at a world market of 130,000 tonnes per annum, although with the level of growth, the world is likely to need another Arafura every 2-3 years, assuming that drive and desire for technology, for advances, continues. And we don't see an abatement in that. There was an earlier question, I believe, with respect to the use of rare earths. I mean, they're all around us nowadays. Your LCD TV, which maybe only 15 years ago, we would have had 1 or 2 televisions in our house. We now have multiple ones. In LCD TV, there's something like $20-30 of rare earths, which aren't recyclable, they're not recoverable, and in terms of the elasticity of pricing that Richard mentioned earlier, in a $1,000 TV, it is not a fundamental cost constraint. It is a fundamental technology constraint because they do not work without those rare earths. So we do have a globally significant resource that will service that growing world market. And in terms of our other product portfolio, we also have a solid phosphate product. We are going to produce uranium oxide. As you heard a few moments ago, in all rare earth deposits, there are certain levels of uranium and thorium. We are looking to valorise that part of the resource. So we essentially have a closed loop of uranium with a bleed. It's about 130, 150 tonnes per annum. It's less than 1.5% of Australia's production and export of uranium, but we plan to valorise that. In addition, gypsum. We have demonstrated that we can make plasterboard grade gypsum in a demonstration plant. So we have a co-product there with value to the marketplace. And in terms of project history and timeline, again, we heard earlier, even if you discover rare earths overnight, it is very difficult to develop the whole project overnight. And Linus's development time was even a little longer than ours, 12 to 15 years for the development of a robust rare earths project is not unusual. And that is the space that we are working in. It's the timeline that we are presently in. And not only is it the time that takes that is consumed, but there's an outline there of the effort. 100 kilometres of drilling into the resource. By the time we get to the end of the feasible bankability study, approximately $250 million of shareholders' money will have gone into the development of this organisation. So we've completed a lot of hard yards, and there are still more yards to go. But we have the traction, we have the team, we have the technology, we have the energy. And this is the timeline for next year of what is happening. There are just one or two outline items on there with respect to mine planning, technology demonstration. I'll cover more of that in a moment. The engineering studies, environmental impact studies, and their associated regulatory approvals, plus supply contracts. And an ultimate aim of any organisation is to sell the product that they are producing. So we are heavily engaged in that area also. So, our approach to the Nolans resource. We are engaging world-class experts to assist in all aspects of the development, and a number of you may know, a number of you may not know that at the moment Sydney actually hosts an element of production of rare earths. We are utilising the facilities out at Anstow at Lucas Heights, where we are presently honing and refining our technological developments. We are de-risking the planned installation. We have made some changes in recent times, moving from a phosphoric acid co-product to a solid fertiliser phosphate product, which will be substantially less utilities hungry, less capital intensive, and simplify the logistics arrangements considerably. That obviously minimises our capital requirements, but they will be still substantial. As I mentioned earlier, a world-scale chemical facility does not necessarily come cheaply. So we have released, it was just over a year ago, the financials for our project, which indicated a cost of approximately $1 billion, depending on which parts of the installation we could manage to joint venture or partner with organisations that were interested in their core business, and we are moving through that bankable feasibility study to hone that and refine it further at present. And we have optimised our product mix and the quality to go with it. And that is not just in theory. We have actually done those hard yards of development and separation, which the separation technology for rare earths is closely held in China. There are, in fact, elements of legislation which prevent the release of that technology outside of China. We have developed that all-Australian model to take that a stage further in Australia, and we have developed it here. So, just to show you a relatively flat landscape, a shot of this year's drilling campaign. As you see, there are 5 rigs on the site at that particular time. We actually undertook to double the amount of drilling that we'd done into the resource this year to almost 100 kilometres of drilling. So we now believe that we understand the resource significantly better, and our guys are working excessively hard at present to generate that new resource model, which our GM of exploration did define it recently in a corporate video as an early Christmas present. We are still, as I said, working hard. We will have a larger resource. It has thrown up some interesting problems. The fundamental one, which I'm sure a number of people in the industry are familiar with, is we still don't know where to put the dunny, because the area we had identified, we've now found resource there as well. So, a little onto technology. And an outline flow sheet. It just explains some of the basic processes. The initial part of beneficiation, which is at the mine site, coming through to what will happen at Whyalla, which looks like quite a complex diagram, but it's what I term pots and pans in organic chemistry, most of it. It is precipitation, filtration, dissolution, reprecipitation, refiltration, redissolution, until producing that mixed carbonate. That then goes into the separation process that I mentioned earlier, which is a solvent extraction process. To take those 17 elements, which are very closely related in the periodic table, not only are they closely related on that periodic table, but physically they're closely related. They have very, very similar properties. So to separate those out, it takes an awful lot of effort, intelligence, and resource to do that, and we are using some of the best in Australia to do that for us. And as I mentioned, we are very pleased with our progress on that front. In terms of guidelines, we have very strict, very comprehensive environmental guidelines in which we have to comply. Our guidelines in South Australia included 177 items which we have to cover in our environmental impact statement, which we also see as an advantage. And I think it's, again, a couple of points that were touched on earlier in Richard's speech with respect to our customers. Other nations see very low sovereign risk. They see environmentally compliant installations and a belief that things will be done well and will be stable, well established for the future. So, building a little further on the technology, and my love for chemical plants, I'm afraid, shows through here. I mean, my wife still doesn't get it after 17 years that I like chemicals one way or another. So here are a few shots of chemical processing from a mixed carbonate that was produced in 2009. Some of the 2009 piloting work, you can see the scale that we're working at there. Moving up in size and throughput terms until we get to man-size installations, which is the demonstration plant that we are presently constructing here at Lucas Heights. There will be some possibilities to visit that in the new year when it will be operating. It's being powered up, things are being spun round at the present, and I'm going there tomorrow to see all of the action. So, stepping back a little, or stepping out with a slightly wider view in terms of the rare earth space, the historical journey of the supply tapestry, and here maybe one or two salient points are that China didn't actually produce any rare earths until the 80s, and as Deng Xiaoping famously said, that the Middle East it has oil, so it has power and control. China has the oil of the future. As we are seeing, some of that prophecy is coming true. For those who drive hybrid cars, it's almost the oil of the future, but it is much more than that. It is in all of those lifestyle goods that we have an appetite for, an insatiable appetite at present. And so that leads us to supply and demand and the growth. I was pleased to hear that growth is not directly related to GDP growth. However, from our data historically, it has maybe been something of the order of 8% of growth per annum, and it tracks reasonably well over short periods, but that technology drive has certainly given the rare earth market a substantial kick in more recent years. And in terms of where do we see it going in the future, as we all know, there are an awful lot of rare earths projects announced, rare earth wannabes coming onto the market, and what is that going to do to the supply and demand tapestry? Well, here we have actually included all of the announced projects that they are going to be delivered on time in full. And so if we're graphing the demand with the supply, as we all know, demand can never outstrip supply once you have consumed the stock. So the situation, we still believe, is very healthy, because in terms of occupacity, occupacity is the utilisation of those rare earth processing plants, those rare earth mines, with respect to their nameplate capacity. The rare earths market is still going to need every plant running at in excess of 100% in order to continue to deliver our appetite for those materials. And in terms of price trends, taking things back a little further in history, and if we look at, we've talked or we've heard about rare earths in this space in more recent years with respect to their value in the market. However, if we look back further into the 80s, rare earth pricing was significantly higher. And does that look like a normal market-driven graph? I would beg to say that it doesn't. It is one that has had a significant external influence, and that influence has been China. However, just before the GFC, there were indicators that that influence was reducing. And in more recent times, post-GFC, we believe we're seeing some more market normality coming back. And that will be there for the future. It will have certainly still a degree of Chinese influence, but in terms of control, there is going to be less for the future. So it will be more and more market-driven. Our target customer program. We have recently signed an LOI with ThyssenKrupp. We are targeting a number of specific customers in specific areas of the world. The larger consumers of the world are in Japan and Korea, once I'm excluding China from that, Europe and the USA. The US military realised that their satellites and missiles don't necessarily all work without rare earths, so it has an added importance to the US military, the US government, and worldwide. So we are, we believe, going to be the only new supplier with significant volumes available for sale. And we are developing our relationships with customers. We are talking to them in detail about the specifications that they require, and as you will see shortly, we are actually going to be delivering samples to them in the very near future, such that they can conduct their testing on our materials. And back to project comparisons, market value, our industry peers. We do actually believe that we are undervalued in comparison to our peers. Now, Molycorp and Lynas are further down that development scale, so we would expect that. However, this is not truly reflected, we do not believe, in terms of our degree of advancement in comparison to other organisations. So we think there is untapped value there that people do not yet realise, that we need to better communicate. So, in terms of investment opportunity and that untapped value, one or two items there. We have $45 million in the bank. We are burning money at a reasonable rate at present. You do not build a $20–30 million pilot facility without consuming that sort of cash. And therefore, our burn rates are eating into our cash funds. However, that is going to set us in very good stead for the future. It means that we have the technology nailed, we have the way forward, we have the detailed engineering to run on the basis of the demonstration and piloting facilities that we have commissioned and conducted, that we are set up for the future. One point that you may have caught is that we did recently cancel a rights issue, which was placed initially at 60 cents. However, I think going back to Tim's graph earlier, our 60 cents was well after the peak, but it was still on the downward trend. And although we had a considerable uptake from shareholders that really truly do believe in the Arafura business, it was not the correct thing to do to continue with that rights issue when the European crisis had tended to affect the share price below that 60 cents level. So we have recently engaged Macquarie as our financial advisors. They are working closely with us in order to ensure that, just like in an engineering sense, we have a MinProc on board, we have AECOM and GHD on board for the environmental impact studies. Macquarie are on board for our financial advice and to help us carry this project forward as quickly as possible. So, to summarise, we do have a well-regarded all-Australian business model. We have a world-class resource which has potential for future expansion, and we do believe we're one of the very few organisations that are going to be in production this decade. We have significant community and governmental support, both in South Australia and the NT, and we are designing our plant to the highest standards. We have developed our technology. We're on track for completion of the BFS next year, and those customer discussions that I told you about are gaining traction in many areas. Plus, the undervalued statement that I mentioned earlier. So, where from here? Well, it's that BFS, it's that project finance. It is then about constructing and building the facilities and turning them into sustainable, efficient operating facilities. And that is our desire, it is my desire, it is everybody's desire within Arafura. And we believe that, that with a little help, we will get there. But just to give you a flavour of the management team, maybe I guess I would maybe best describe it as a great mix of experience in the required disciplines in order that Nolans is a great success. And I guess hopefully at some time in the future you will invite me back to enlighten you more on our success, and by that stage I'm sure I will have a few more grey hairs. Thank you very much.